Welcome to the Smarter Money Life, powered by Forum Credit Union, where we dive into the world of smart financial decisions that can help you take control of your money to live a more fulfilling life. Whether you're looking to save more, invest wisely, or simply manage your finances better, we've got you covered. Our organizational purpose is to help you live your financial dreams. So sit back and let's get started on your journey to financial success. Hi everyone, welcome back to the Smarter Money Life. I'm Andy Mattingly, and today we're walking through the key financial goals to discuss or to focus on at every stage of your adult life. Now, whether you're just starting out, raising a family, or planning your legacy, having a clear roadmap can help make a huge difference in your financial confidence. And if you're in a couple of stages ahead of the first ones, make sure you've done these so that you can move forward with confidence. So let's talk about the Launchpad. That's your late teens to early 20s. This stage is all about building healthy habits. Start with a simple budget, get in the routine of tracking your spending, open a starter credit card, use it responsibly, pay the balance in full each month to establish strong credit early. Next, begin building your emergency fund. Aim for that first $1,000. Then work towards that 1 to 3 months of expenses. If you can, start investing. Contribute enough to get any employer match and consider opening a Roth IRA. Small steps here compound for decades. Now, when you're early in your career, that's your 20s to early 30s, as your income grows, so should your financial protections. Increase your emergency fund to that 3 to 6 months of essential expenses. And make a plan to pay down high-interest debt. Try to save around 15% of your income for retirement. This includes your employer match, so it doesn't all have to come from you. Take advantage of tax-favored accounts like the 401ks, the health savings accounts, and Roth options if it's important to you. And if you have big goals like buying a home in your future, start planning intentionally now, which means raising your credit score, having funds, things like that. Now, when you get to that family building and growth stage, which can be in the 30s and 40s, life gets more complex here. So organization matters. Keep your emergency fund fully funded. Review your insurance coverage to make sure your family is covered if something happens to either of the parents. This is also the time to complete key estate documents, your will, powers of attorney, and beneficiary updates, because you want to make sure whatever you did in your 20s isn't what you have in your 40s. Stay on track with retirement contributions so that by the time you're age 40, you have around 3 times your salary saved. If children's education is a priority, consider options like the 529 plan. And keep your housing costs manageable, ideally under 28% of your gross income, because you don't want to take away from retirement for some of these other things that are going on. Now, your peak earning and optimization time is that 40s to 50s. During your peak earning years, it's important to optimize. Increase your retirement contributions as high as you can go. Aim for about 6 times your salary to be saved by the time you're 50. It's kind of a reasonable goal. And review your investment mix and make sure you're not overly concentrated in any single mutual fund or type of fund. Prioritize retirement savings over college funding if you need to choose. And don't forget to revisit insurance needs, including umbrella coverage. And think ahead to potential elder care responsibilities, either for your parents or for yourself, thinking about like long-term care insurance. Now, when you get to pre-retirement, the 50 to early 60s, this is where your planning gets more detailed. Build a comprehensive retirement plan that outlines what you'll spend, where your income will come from. And this is when you can start taking advantage of catch-up contributions. So you might want to adjust your investment risk and work towards reducing or eliminating high-interest debt, because you really want to be as debt-free as you can when you retire. Review your Social Security strategy and evaluate tax-efficient moves like Roth conversions if it's appropriate. And also prepare for Medicare decisions, and long-term care planning needs to really be in focus now. In your early retirements, 60s to 70s, your focus shifts to managing withdrawals, preserving your income. Try to keep 1 to 2 years of cash reserves set aside and maintain a sustainable withdrawal rate. Stay mindful of required minimum distributions and tax implications. This is also a great time to streamline your accounts and reassess housing needs. If charitable giving is important to you, tools like donor-advised funds or qualified charitable distributions can also help you. Remember, no matter your age, the basics never change. Spend intentionally, avoid high-interest debt, and invest consistently and review your plan each year. Thanks for joining us on Smarter Money Life. I hope you found today's tips and insights useful. Remember, smart financial decisions can lead to a brighter, more secure future. If you enjoyed this video, give us a thumbs up, subscribe to our channel, and hit the notification bell so you never miss an update. Share your thoughts and questions in the comments below. We love to hear from you. And until next time, keep striving for financial success and living your best life.